Aussie Wine avoiding China. Let's have a look. Hello everyone, Florian.heise here and welcome to another episode of HeiseSays. Grab your stein of coffee and let's have a look at this news.com.au article that was shared to me by a viewer on Twitter about Aussie wine finding new markets and diversifying away from China. The first thing it made me think about was the old $2 clear skins. Remember that? When you get a carton at $2 a bottle, a box of wine really, and the problem with it was you could crack open a bottle, you'd be sitting there, I'd be drafting, sketching up ideas, and I'd be steadily drinking it away, and then all of a sudden, a bottle of red's gone and you're pretty tipsy. Or Rachel would be there watching a movie and I'd be working, I'd walk in the living room and she's completely plastered because she's polished off a whole bottle. Ah, the good old uni days. But, the issues of the trade dispute between Australia and China, and even just China shutting down imports of certain goods, we saw some industries really suffer. The rock lobster industry over in Western Australia, the co-op there, which is hugely dependent on the Chinese market, got into a lot of trouble. A lot of trouble. So, the fact that our wine industry is finding other markets, that's very encouraging. So let's look at this. Australian winemakers will need to diversify into other markets to ensure industry stays viable in the wake of China's trade dispute. China's crippling tariff on Australian wines are creating major challenges, with producers quickly trying to pivot away from the economic cash cow. Australian winemakers will need to diversify, we read that, from China as the main export market in the long term, as ongoing tariffs stifle trade between the two nations. Economists and investment analysts are pointing to short-term challenges, while the industry attempts to shift product away from the major economy, which for years has been perceived as an exporting cash cow. China slammed Australian wine with import tariffs of up to 212% last year, after Chinese investigators alleged producers were dumping wine into the Chinese market to drive down prices. The Chinese government has been accused of taking the measures to punish Australia for calling for a global investigation into the origin of the coronavirus. A note from investment house Ord Minnett on Thursday revealed wine exports to mainland China for the 3 months ending in December had fallen 98% due to the tariffs implemented on the 28th of November. Well, there you have it, guys. There's a huge dent to exports to that market. And there's another article I saw that I might look at for a video, but just how much Australians are drinking, guys. And no alcohol's healthy for you, okay? I'm sorry. I know people are going to say, yeah, the antioxidants, it's all BS, guys. None of it's healthy for you. Don't get me wrong. I like a good drop. There's plenty of episodes here, usually live streams, where I'm hitting the Bundy rum. But, don't kid yourself to think it's healthy. Exports to China will remain constrained as long as the tariffs are in place, the brokerage said. The challenge of relocating wine previously sold in China to other markets is significant and is expected to weigh on industry margins, with a mix shift to lower margin countries and increased volumes to be sold in Australia. Investment bank Goldman Sachs said the impact of tariffs had cast a cloud of uncertainty over the earnings potential for the country's largest producer, Treasury Wine Estates, which is expected to release its interim results revealing the extent of the damage on the 17th of February. Given the divergent forces imposed on TWE's operations, the ongoing anti-dumping investigation, and preliminary deposits imposed in China and business restructuring in the Americas, we view the outlook as highly uncertain, Goldman Sachs said in an investor note. Despite the challenging short-term effects, NAB economist Finn Zilberl said the diversification into other markets would benefit the sector in the long term. Well, yeah, that's pretty obvious there, mate. It definitely would. What's concerning is for any business being too dependent on one source of revenue. And this is no different to any other business. I was in that situation when we had a significant portion of our business was just coming from the mining sector. Just mining work. And a lot of that was coming from one client. And when you're a business of 8 people and 6 of them are working on jobs for one client, you kind of get a bit worried. So I was doing a lot, anything I could to get out there and bring in more work from other sectors. But to be honest, it really helped us, because that back then there was a big hit to the industry and all the multi-res, everything got hammered. We were quite fortunate to be where we were, but still, it's a risk. You can become complacent. So being dependent, one company or country, is always a risk, he said. There is an increasing conversation around diversification. There are alternative markets, but the challenge around that is China has just been such a large and profitable market across a number of commodities. Well, you know, profits aren't going to be the same. That's it. Everyone wants their slice of the China pie. Do you hear Steam, the online gaming sales platform? They're starting up a China shop now. So that'll be interesting. Is Epic listed? No, that's not Epic. Well, is Epic listed and is Steam listed? I've got to check. Is Valve listed on the stock exchange? I'll look at that later. The Economist from the major bank flagged producers may have to accept lower prices in other markets in order to move wine volumes. A higher Australian dollar, which is expected to hit 80 cents by the middle of the year, will also impact the selling price of wine and could be an additional pressure for exporters. Mr. Zibel said other industries crippled by China's sanctions have been able to find new markets, such as barley, which has pivoted exports primarily to Saudi Arabia. There are clearly alternative markets, and diversification is a good strategy for a lot of businesses to have, he said. Long term, the wine industry has a lot of great opportunities. The challenge is moving into those markets and establishing relationships. It takes a long time to establish relationships with importers in various countries. So let's have a look at, I'll just bring up here the agricultural census, and let's see what sectors are producing here. And what do we want to look at? We're going to we'll look at the area. Here we have it. Fruit, nuts, grapes, total area. And you can see here, New South Wales, we have 22.7%. This data is from 15-16. Queensland, we've only got 1.3%. Northern Territory, 0.12%. So there's some actually growing right here. Okay. South Australia, it's 46%. And, well, that's no surprise at all. Tasmania, 1.07%. Victoria, 21%. And Western Australia, 6%. So you can see here, you know, the regions that are going to cop it the most if, well, demand for grapes significantly decreases due to this. What do you reckon, everyone? Maybe time to go pick up a cheap vineyard in some parts of Australia, some grape growing? There we have it. So at least there's some discussion and consideration of diversifying away from China. What do you think? Anyway, guys, thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join the channel on YouTube or Patreon. You can support us using our affiliate links from Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us using PayPal. You can also use the SelfWealth link down below. You get 5 free share trades, and we get 5 free share trades as well. Take care, and I'll see you next time. Bye for now.